Welcome back. So, what happens when you want to get a home and you're sick of renting, or maybe you've been a homeowner before and then now you're renting and you want to get back into becoming a homeowner again, and you go see someone like myself or a loan officer or a mortgage broker, and that person says, I'm so sorry, but based on your credit or your down payment, or based on this or that, we just can't get you a loan right now. We can't approve you. Well, typically what happens is most people then go, shoot, that stinks, right? Or maybe they say some other words, but they're not very happy about it. And if you have anyone who is at least even close to worth their salt, and a professional, they're going to not just say, hey, sorry, can't help you, come back and see me in a year or two, right? They're going to say, you know what, here's what we can do. We're going to be able to probably help you maybe in a year or two or three, and here's what you need to do. Maybe your credit's too low. Maybe your business, right, your time on the business is not long enough. Maybe your time on the job is not long enough. Maybe you're working part-time, but you need to have full-time income, right? All of these different things. Or maybe you went through a foreclosure, a short sale, or a bankruptcy. These three things, guys, are what I kind of call black hole events. Black hole events are things that no matter, even if you said, I've got an 800 credit score now, Jesse, I've got $50,000 in the bank and I'm only buying a $100,000 house. If you had a short sale, foreclosure, or a bankruptcy, you're in a black hole of time where, at least for a conventional mortgage or FHA product or a VA product, right, a government-backed loan or a conventional type of loan product, which is 90% of what's out there in the market these days, you are stuck having to wait because of these things, okay? Well, in my opinion, I think that's terrible. I think it's really unfair. I get it. This is a whole risk related business, as we've talked about a lot. But there's a lot of times that things happen that you can't control, right? Maybe you went through some medical issues. Obviously, you didn't raise your hand and say, oh, gee, can I have some medical problems, please? And then, not work full time and then not be able to pay my bills and then get behind. Gee, sign me up, right? No, nobody says that. So there's things that happen that are not your fault. Perhaps you went through a divorce. Okay, now maybe that's debatable on if that's your fault or not or whose fault it is, and there's probably a lot of that going on. But the point is, right, divorce is not fun. And in doing this business for 15 years, I've hardly seen anybody walk away from a divorce that's in a good condition from where they were, right? The employment, the credit, the things just change. It's very, very tough, okay? So these types of things, when you go through these situations, and if you're being told that you can't get a mortgage, number one, you may have another option somewhere else. Just because one person says you can't doesn't mean that that's it. That doesn't mean that's the final answer, okay? They may not have access to certain products and programs that other loan officers or mortgage brokers have, okay? They may, frankly, not know their stuff. They may not know the rules or the guidelines as well as someone else. They may be lazy, to be honest. They might not care. So that could be the case. But if you truly, say you went and talked to 2 or 3 or 4 different people and they're all like, yeah, you can't. You just went through a foreclosure. Your scores are here. I'm sorry, you're in this black hole event. You have to rent for a year or 2 or 3. There is something called a rent to own or a lease with an option to buy. When the cool thing with this is if it's done right, which is key, if it's done right, if it's done using professionals to help you facilitate and represent you in the process, you can get some of your money every month that goes towards the purchase price of the home. Okay, you can sometimes, not always, but sometimes fix up the property, make it nicer, make it how you want to make it. Don't sit and stare at this ugly kitchen for 2 years and just pay rent. You can actually fix it up and make it nicer. And then when you go to buy it and you get the mortgage, it's already, worth more money because you've put that into it. So there's some very cool things that way. Typically the purchase price is set, it's agreed upon upfront, so you know what that is. And if it's worth any more money than that when you go to buy it, you've got instant equity. Now, if it's not worth that when you go to buy it, let's say you agreed to buy it for $220,000 2 years from now, but 2 years from now it's not worth $220,000. Well, guess what? You can just walk away and not buy it. Now, sometimes you may have some money that you paid up front that may be non-refundable and you may lose that. but you're not having to sell a house that's not worth it. You're not stuck with this house that you can't get rid of now that maybe you would lose $30,000, $40,000, $50,000 on, because let's say the market went, right? You only lost maybe 5, 10, 15. So there's a lot of moving parts and pieces. My advice to you is, if you have any questions on this whatsoever, we've been helping folks purchase and sell property for over 6 years through our various teammates and partners with the rent-to-own process. We also have investors we work with who buy and sell on a contract for deed, which is another way of getting a mortgage without having to get the bank loan right now. So if you have any interest, let us know, and we'd love to help have a further conversation to help guide you through that process.